And welcome back. We're at the Identity North Annual Virtual Summit. And in this session, we're going to be jumping right into the Introduction to Digital Identity and Methods, Open Banking Standards and Frameworks, where we're going to take our learnings from earlier today on how to get on board into a digital identity space and use that for the ability to share information among some of our most trusted institutions, our banking networks. And today we have Sue Britton, who is one of the leading experts in open banking and customer-directed finance in Canada.
Hi, Gene. Thanks for having me.
Well, thanks for being here. This is going to be a great session, and we're very much looking forward to seeing how open banking and digital identity can interact with each other. So recapping the value proposition that we have, digital identity provides us a way to reduce our friction with our transactions and sharing of information, obviously saving costs by making things faster, easier, and automated, and reducing risk by going straight to our trusted sources. Digital identity being the ability to share information and trust between two trust custodians is paramount to looking at that definition and how things will work through in order to help make our lives better for our customers. Open banking takes this to the next level by looking at all the different types of the most valued transactions that we have with our banking network in order to glean information and leverage that for our future. This is going to be an exciting road. And with digital identity, starting with resolving a live person and then confirming, do you trust their records, and looking at the device security and the channel to make sure that you can rely on that information. All of those methods that we talked about earlier today are building up together in how we work with open banking. Open banking is a very important bridge on this because it's going to give us really good detailed information about our lives and how we interact by looking at all those volumes of transactions that our banking network has for us. It will also strengthen what we know about each other, and it'll strengthen about that resolution. So in many ways, open banking will reaffirm and strengthen our digital ID networks. Hence why we thought this was a great fit into looking at the frameworks and where we're going next. And who better to do that than with Sue? Now, on the risk reduction, I wouldn't be a great compliance officer if I didn't have to have at least a touch of a focus in this. And this also touches on why now? Why now as opposed to 5 years ago? Or why now versus 5 years from now? And I think there's a few things intersecting. We have some great things in digital identity using verified bank accounts, so we know who money's going back and forth to, with verified mobile devices and great architectures that are happening there, and even information exchange with our government. This is reducing a number of different account takeover and customer fraud risks, which will give people the confidence to use technology to move forward with our information exchange, especially leveraging networks that open banking and customer-directed finance will bring. And that leads us over to Sue. Teach us more, and we're looking forward to what you've got to say about these new networks and where we can go from now.
Okay, great. So what I wanted to do today was to walk through a fairly quick overview of the standards and frameworks, both that are emerging in Canada and that are present around the world. But I'd like to just quickly tell you who we are and what we do. So as Jean mentioned, I'm Sue Britton. I'm the CEO of FinTech Growth Syndicate, which we commonly refer to as FGS. And essentially, we're an advisory firm that works with large incumbent technology companies or financial institutions and helps them grow in the digital economy. And we do that through our expertise, through strategy development, and then ultimately through product innovation. So open banking is something that has been discussed quite significantly in the Canadian market, but it got its start in the UK. And it was first introduced in the UK and now is in many jurisdictions globally. But essentially, it can be understood as a part of a broader movement or shift towards a data economy or ownership and safety and control over data. And so ultimately, it's a term that we seem to use, although I'll talk about what we've decided to call it in Canada, both formally and informally, to reference a banking customer's right to share their own financial information with third parties. And there's a whole host of issues that that are raised once you start talking about sharing of information. There's the security of it. There's the, are you aware that what you're doing is consenting to share your information? There's who owns that information and what you can do with it. There's how does it trigger competition and innovation? And then ultimately there's the liability of what happens when something goes wrong. But ultimately when it's implemented, I think one of the biggest and most important topics is that it does take some of the friction out of the ability for consumers to find other products, to compare products, to share their information, to get access to other products. And so ultimately, I think the competitive threat and then ultimately the positive opportunity to create new business models and or negative opportunity to have that impact your bottom line is one of the biggest market dynamics that we all talk about. So in Canada, we have decided that we're going to call open banking consumer-directed finance. And at this stage, it is not any different than the original scope, which was focused on the sharing of data with third parties and primarily for retail banking. But now that it's named consumer-directed finance, I think you could see very soon an approach that includes other type of financial products other than retail banking. But it is more than likely that it will first appear as something that deals with retail banking. And so what is it? So, for those of you that are maybe new to this, this is potentially, your first time hearing about it. For those of you that are experts in the room, I'm trying to set a bit of a base of knowledge before we dig into some of the bigger topics. So what consumer-directed finance is where, as I mentioned, consumers or businesses, frankly, are empowered to share their financial data with a broader range of financial service providers, what we like to call fintechs, but really, realistically, it's much broader than fintechs. And then subject to their consent, which is something that has to be obtained, the financial institutions would then share that data. There's a few models for how that would happen, whether that is something they have to do or is optional for them to do. And then those financial service providers would then use that data to provide the service. And companies that are receiving that data have to meet certain standards. Then those companies would develop and offer, innovative products that draw on that customer's financial information or business financial information without requiring any additional new login information to be created. So it feels like you're using, very, very easy information you already have to start to use another product. And ultimately, this should be something that gives consumers and businesses the ability to kind of move freely amongst different financial products that could be within their bank or outside of their bank. And they should be able to opt out anytime. So that's at a high level what consumer-directed finance is. And the use cases can be, I'll give you a few examples of retail use cases and a few for the business or commercial space. One that is most, I think, common and probably used quite a lot today is linking your accounting platform if you're a small business or if you're as an individual, where you can track your expenses, or something like a personal financial management tool that helps you with budgeting or helps you with setting savings goals and things like that. That would be something that would be connected through consumer-directed finance with obtaining your consent and so on, like I mentioned before. But another thing might be that, if your banking product that is offered by your main bank doesn't meet your needs, consumer-directed finance would enable you to go find alternative banking products, or potentially go find non-banking products like, and this is a big thing now happening in other regions where you can actually get offers for things like your insurance or your utilities, which are, utilities are clearly not banking products. With businesses, and especially today with COVID-19, this would enable businesses to be able to get access to tools and services that they may otherwise not know exist. And the reason I say that is because we have 1 million small businesses in Canada, and many of them don't really, they're just now starting to get into being fully digital because they have to be, and they don't necessarily know that they could have cash flow tools or financial forecasting or whatever available to them. So I wanted to start with where this started in the UK, because there is some very specific differences between other regions and Canada. So in the UK, open banking was started because the Competition and Markets Authority, which is a regulator, so they have the regulatory power to change the regulations, and their job is to monitor the retail banking space. They felt that the UK market the banks were not, did not have to work hard enough, and then I believe this was a quote, work hard enough to keep their customers. So in other words, they were concerned that there wasn't enough competition to protect consumers. So they launched this investigation, and they came back and said, yep, that's the case. There's not enough people, not enough competition. And then the other thing that they found was that several million people were using screen scraping or aggregation, data aggregation. And for those of you that are maybe not as familiar with that, if you've heard of Flinks or Plaid or Yodlee, essentially it is the scraping of information through your giving of your banking login and password. And when you do that, these screen scraping entities basically act like you, take your information, download your transactions, and then they're able to perform the function that you've signed up for. So in my case, one of the examples I talk about a lot is Milo, which is a personal financial management app, but it essentially rounds up my purchases and helps me save money fairly effortlessly. I signed up for that and gave them my banking login and password, and they were able to do everything that they need to do. So in the UK, with a population of just over 60 million, 2 million people were using these screen scraping tools, and they were considered to be high risk. And they also violated the banking agreement. So there were two issues to solve for, and that's how open banking was sort of born in the UK. And what the regulators decided to do was to rather than to specify the specifics of how this would be implemented, they appointed someone to head up the OBIE, which is the Open Banking Implementation Entity, which was comprised of people from the industry. So it ended up being something that was, the framework was put in place by the CMA, but then the industry implemented it. And you can see on the right-hand side of the slide a few other things that were addressed. So, allowing, and this was more on the competition side, allowing people the ability to move freely and unbundle their products and go choose competitive products and things like that. So very much a competitive led industry change. In Canada, we have been talking about open banking, as I mentioned at the outset, very much in the last 12 months, frankly, probably for the past 2 years, but in the last 12 months, we had a lot of progress. One you have likely heard about, which is with Finance Canada, after it was announced in our federal budget that there would be a focus on open banking as something that was necessary for Canadian consumers. And then the Senate Committee on Banking, Trade and Commerce conducted a study in addition to that. So there was the consultations with industry led by Finance Canada, and there was consultations led by the Senate Committee, which in Canada is an independent Senate made up of some talented and wonderfully bright experts in a variety of topics. One of those people that has been a big spokesperson for open banking is Senator Colin Deacon, who's a past entrepreneur, and Senator Howard Wetson, who is a past regulator. So they did their consultation, and then they provided a report, and with a very strong call to action and a sense of urgency that Canada needs open banking or consumer-directed finance. They went as far as to prescribe who they think should oversee it, how it should be developed, and that the consumer was somewhat lost in the conversations, and that there was, and this is, FGS's opinion, but I think it's shared by many, that really the consumer is actually not very adequately represented in financial services in Canada. So some effort needed to be paid to support that. And so the thing that we hear most about with respect to open banking and why it's not something that is, why it's a big topic, why it's important, but also what are the risks. And that is mostly around security. So in the UK, the CMA gave the highest priority to the technical security standards to ensure that they were appropriate to the sensitivity of the data that was being shared. So that was a big part of the establishment of the framework. And also that fintechs would have to go through an application process to be certified, or this term they use, whitelisted, so that they would be approved to have access. So ultimately, what this doesn't say in black and white is the aggregators, in the way that they are accessing information today, like the Flinks and the Plaid and the Yodleys, would be eliminated. So in effect, they may in fact turn into service providers for open banking, but ultimately that act of scraping information would no longer be allowed. And then of course that the consumers could authenticate their identity simply and securely and exercise informed consent. And so the whole concern is that all of this is not happening in a world that does not have open banking in place or in a market, and that financial crime is a much larger risk. So what are the risks when it comes to competition? So in Canada, one of the things that FGS does is we monitor the Canadian market because we believe it's a source of, the indication of what consumers and businesses want. Fintechs are companies that have, come to market because there's a need in the market for their solution, by and large. And so the competitive risk with open banking as it relates to fintechs coming and taking business away from banks is not, it's complex. It's not actually as simple as every fintech in Canada would like to take business away from financial institutions. In fact, of the 1,200 or so that operate in Canada, and that includes big companies as well as small companies. So it includes what we call incumbents, but it also includes very, very new entrants. Just over 400 of them actually sell and compete to sell products directly to small and medium-sized enterprises. An example of that might be a alternative lender who is providing a loan or a working capital solution to a small business. Those organizations are still just getting to market. They're really not competing heavily right now against the financial institutions, and that has to do with a number of factors, but there's quite a few of them there. I think there's over 30 of them. Those are definitely competitors to banks. There are no small and medium-sized enterprise banking accounts in Canada yet from fintechs. So the financial institutions, all they're really at potential of losing is if they have other products and services, like, for instance, QuickBooks as an integration or something like that. And then on the consumer side, there's even less fintechs that are direct to consumer that are competitive again with banks. Some of the more concerning ones should be Stack or Coho, who have a competitive banking product in market. We call them a challenger bank. But generally speaking, there's many other types of B2C or business to consumer fintechs. And then the rest of the fintechs, they actually just want to make banking, help banks and other financial institutions make banking easier. So a competitive risk is definitely a concern, but I think, frankly, there's much more opportunity for partnership and collaboration than competition. And when we look across the world at what's happening, I talked a lot about the UK. So the major banks there, they all had to implement open banking in 2019. We've got Australia, which has taken a slightly different route towards implementing what they call a consumer data right. And that is legislation that focuses on the consumer data and not on financial services per se. It focuses on the ownership of your data. And so Australia is a very different implementation. The US has a number of discussions ongoing. Nothing has been implemented or decided. But what you can see in the US, and I think this was largely triggered by the UK, where global banks that were required in the UK to implement open banking started to work towards implementing the same sort of technology in other parts of the world. And you can see that with some of the larger banks in the US, and then some other large banks in the US took the lead. And the only thing to note about Canada is while we were making really good progress in 2019, we actually now are on hold with the consultation process. So the Finance Canada submitted their report after the first round of consultations. They expanded, and at that point that in January, they released this report, and it was at that point that this group identified that it should be called consumer-directed finance. They also broadened the concern in the beginning, which was mostly around the effectiveness of the market and competition. It is now very much about privacy and innovation, but privacy has now become a bigger focus for Canada. So we're on hold right now, and it was attributed to COVID-19 and the fact that the financial institutions are not able to come to the table right now because COVID-19 is keeping them busy. So we're going to lose some time, probably quite a bit. So I think that is definitely a concern. And it's interesting because in other parts of the world, it's been the reverse. It has been that COVID-19 has accelerated discussions. So I know our government's working really hard, but it's too bad that we can't find a way to give them a little bit more support so they can keep going. So another thing that I wanted to touch on is just the frameworks and how one way to think about them to understand how the differences across the world. So you will hear things like, was open banking a regulator-driven initiative, or is it a market-driven initiative? So Australia and the UK were both regulator-driven. They were different outcomes, but the regulators were the ones that essentially announced after doing their investigations or consultations that the industry had to move in a certain way. They had to do certain things. It was all laid out, and a date was given. And in the US, as I said, it's much more market-driven than regulator-driven because the industry is coming to the table faster with solutions. And we're starting to see evidence of the same happening in Canada, where we have a couple of industry associations making some inroads into the Canadian market. We are part of two of them. One is called FData, which is a policy and an advocacy group for this topic of open banking, and they are working with many players in the Canadian landscape to try and influence a competitive and open financial market. And also another organization which some of you may have heard of called FDX, They have just finalized a framework for, in their nonprofit, they finalized a framework for uh, uh, the architecture or the specific API, standard API framework across the industry that all banks will use. And that same group is now also in the Canadian market. So and I think one of the simple reasons, and it's way oversimplified, but one of the simple reasons why Canada is likely to follow the US, which again is an FGS opinion, is that our big banks in Canada that do essentially have most of the influence in the Canadian market over, timing of changes to regulations or specific, outcomes of consultations, is that both TD and Royal Bank are fairly large banks already implementing open banking in the US market as a market-driven response. And if most of you, some of you probably are from Canadian banks, the same groups of people that are designing and running systems for the US market are also doing the same for the Canadian market. So I think it's a bit of a fait accompli that Canada will follow the US and that open banking will be implemented in Canada in the next months, probably, rather than years, as an industry, not as a regulator-driven response. And then just in terms of, I'm going to wrap up here because I know I'm kind of getting to my end of my 20 minutes. So when you're defining an open banking framework, there's really no one approach. I think the things that need to be considered and the things that will probably need to be specified by a regulator at some point. But right now, as we call it, consumer-directed finance, right now, if it's still limited to retail banking and data aggregation, that is at the account level. It doesn't include payment initiation, and that is a whole other long conversation. But payment initiation is not in scope at the moment, so that's probably a missed opportunity, but also something that needs to be clarified. How many financial institutions are going to be included or are going to need to comply. Unfortunately, when the large institutions move forward with something, it disadvantages the smaller ones if they don't have the ability and or resources to implement. It makes it even more difficult for them in many ways. So the data that's in scope, again, as I mentioned, this whole thing started with retail banking, but does it include, commercial banking? Does it include other types of financial institutions? And then, the topics on the right, which you can read. How are we going to authenticate consent? What are the standards, which I do think FDX will define those for Canada. And then finally, liability. And that's a hot topic that I'm not going to get into at the moment. And in an industry-led or a market-driven approach, you could see different organizations take different approaches. Some may, be all the way on the right side, very innovative, wanting to partner, wanting to offer products to, maybe their strategy is, let's surround our clients with all the products that they need instead of having them go find those products and potentially, open the door for them to leave us. So that might look like a marketplace with, everything a small business or a consumer needs. And then some, may be more towards the other end of the spectrum where they're going to comply, but they're not going to do anything more than that. And we saw this in the first implementation of open banking in the UK, where, it was 20 clicks before you could actually get to, the page where you could, potentially share your information after open banking. And so, they were making it very difficult for consumers to explore other products. So looking ahead, I think, from an industry standpoint, if one of the things we want to try and do is look at the, what's the best thing for Canada, what's the best thing for a, a competitive market, a healthy economy, once COVID is and or independent of COVID. I mean, I think some of these things could actually generate incremental revenue for both the providers of the services and the ones who are providing additional services. It's just giving customers choice. And so this is something that is the trains left the station in the other regions that have implemented open banking, so it would be virtually impossible to stop it from coming here. Regulatory, provisions or not, and so this is where the future is. So I think maybe as a wrap up, as it relates to digital identity, as it relates to all the really important topics of this event, I think there's a lot of considerations and a lot of potential sort of implementations of consumer directed finance that are going to require a massive amount of handling of data and consumer consents and the ability to be able to verify those consumers. So hopefully that's it. Hopefully that provides a bit of an overview of the standards and frameworks as much as they're known at this stage. And that's all I have.
Well, I think that's quite exciting. And thank you very much for that very thorough walkthrough and talking about the different, especially the international approaches, because Canada is definitely not on its own in this international financial system that we have. So that will be interesting, especially in the anti-money laundering and financial crime space. When COVID hit, you found the global organizations that really drive rules for how financial crime systems work were really pushing for digital identity and greater trust sharing of information. One of the pieces that'll be interesting as a supplemental impact will be moving away from knowledge-based authentication that financial institutions are accustomed to in many ways, that where a customer calls in and they're asked 5 questions and instantly then they have access to their accounts. Well, knowledge-based isn't necessarily going to be the right way to go as open banking rules end up opening themselves up. But most of the main financial institutions have already started moving away from knowledge-based. So I think the digital ID frameworks we talked about earlier definitely are helping, and I think this is going to be a win-win, and hopefully we can have the market move this forward, even if the government is going to have its priorities focused on fighting COVID. So I think those are some great thoughts, and I saw how you shied away from the liability piece. That's always a hot topic there.
Yeah.
I think the interesting nuance there is that open banking, to me, and customer-directed finance should, in theory, reduce liability, because it allows the customer really to pinpoint that limited amount of information that's shared. And information custodians and custodianship and making sure you know who you're sharing your information with is a best practice that I don't think that we're necessarily doing well as consumers today. And I think this will help us down that line. So hopefully people will take those pieces away from it. But thank you again. Any final parting words there, Sue?
No, I mean, I'm hoping, I know this is going to be pre-recorded, and I'm hoping as people are listening that we're getting some good questions when it's presented. Happy to answer any questions now or, after the fact through Identity North. But thank you for allowing me to come and talk a little bit about open banking in Canada. And I hope what you described comes true. I hope we have a positive outcome in the Canadian market sooner rather than later.
Okay. Well, thanks again. And everyone, I hope you enjoyed this session as much as I did. And thanks again, Sue, and for Identity North for this opportunity. Have a great day, everyone.